Hey everyone, me Kevin here. Let's take a listen to see what the president of the St. Louis Federal Reserve, Mr. James Bullard, had to say about the economy, tapering, and more. Let's go ahead and listen in. We're going to jump right into the best parts. Let's go.
Reading it right now, we're certainly hearing a lot of anecdotes from our business contacts about supply chain disruption and other increases in prices, commodities, as you just mentioned. So I think we are going to see some inflation. Then I expect some of that to hang on in 2022, maybe 2.5% in 2022.
So this right here is actually a little bit more concerning because Loretta Mester this morning, who's another Fed president, mentioned as well that we could see supply chain disruptions start settling down and see inflation come down in 2022, but that we wouldn't really see that inflation go away until 2022. Now, I have this belief that we're going to see an inflection point, based on a video I made earlier and a long-standing belief that I've had. We're going to see an inflection point in inflation rotating to the downside between July and October. But the more they talk about inflation lasting through 2022, the longer the sell-off could take. Let's keep listening.
Part of that is the Fed's strategy of being less preemptive than we would have been historically, because we're trying to make up for past misses of inflation to the low side of our inflation target.
Yeah.
So it sounds like
this is because of their new strategy called FATE, which is flexible average inflation targeting, basically saying, hey, we're okay if inflation just sits around 2.5% month after month after month. That's what we want, to get to an average of 2%, and eventually we narrow down to 2%. And that's because they've had such a struggle of getting to 2% inflation per their metrics for a while.
you're in the transitory camp. I'm trying to feel out where you are on the transitory scale. How likely is it that the Fed would have to move?
I love Sarah just cuts them off.
It's a good question. So some of this is transitory, but not all of it, because part of what we're trying to do is get inflation expectations cemented at the 2% target. They've been slumping down below target over the last decade, and we want to reinforce our inflation target. So we want to get inflation expectations up.
This, by the way, is a clarification on what Jerome Powell says. Jerome Powell says, hey, most of the inflation we're seeing is going to be transitory. He's saying, well, but not all of it, because we do, after all, want some inflation. We're trying to get to 2.5% inflation. So again, I'll be transitory, otherwise we wouldn't get to our 2.5%. So you're kind of seeing these mixed messages a little bit. They're somewhat on the same side, but they've also got a little different ways of conveying things. Let's keep listening.
5-year break-even has been trading somewhat higher here, but not at such a high level that I'm worried about it. But I do think it's encouraging for the Fed's policy that we will be able to get inflation up and over 2% over the next 2 years and allow it to be there for some time.
How big a swing factor, President Bullard, for the level of transitory nature of inflation is vaccination rates? And if we get above expectations, does that suddenly mean we're in a worrying outlook for inflation?
They're trying to pin down, hey, if we get like 70, 80% people vaccinated, does that mean we're going to overheat way faster? Great question.
The vaccination process seems to be going pretty well. I would say a good baseline model to have in your head is a technology adoption model, which is always S-shaped. Whenever you see those curves, they're very slow at the beginning, then they rise rapidly, and then it's very hard to get the last part of the technology adoption. That's what's going to happen with the vaccinations here.
That's interesting. He's really saying, he's answering this by saying, hey, think of vaccinations as growing like an S-curve, which, just so you have a graphical picture of what that looks like, you have slow growth at first, kind of like a Tesla, right? Then you get this sort of exponential style growth, and then you get this slowing down again, which a lot of folks think we might potentially be in this inflection point phase now where we're slowing down. And this is another way of saying it's going to take longer to get this last portion over here, that last, 40% or whatever people is going to take longer than the first 60%. Keep listening.
But nevertheless, I think it's going very.
Keep in mind, current vaccination rates, I want to say in California are around 35%, Nevada's around 40%. So it's still work to be done. But anyway, keep going here.
Well, in the U.S., fatalities are coming down dramatically. Confirmed cases are down dramatically. So I think that bodes very well for the U.S. economy and our ability to reopen and put the pandemic behind us. Not as good in the rest of the world, as you know, but going very well in the U.S.
Which brings us to the jobs question. Today, we got data showing 8.1 million job openings, a record high. We've started to see wages move up, so there's clearly demand for labor, and yet April's jobs report was disappointing in terms of the number of hirings. Why do you think that happened?
I think it's just a little bit early to really expect a big jobs growth. You've got the pandemic not quite over yet, not everybody vaccinated, still at risk out there. It strikes me that for a low-wage worker that's been disrupted, it's not that great a proposition right now to tell that person or ask that person to come back to work.
So then he touches on jobs and some history. Got a little boring there, but then Sarah Eisen comes in with a good question. I'm going to tell you that question right after I mention that you should check out that extended coupon code link down below. I did hire somebody to work on marketing, so the next price increase is going to be a little bit more than usual. Check that out before that coupon expires. Link down below. You get lifetime access to the lectures. It's very different from the content you get on YouTube. I think you'll love it when you get inside. Almost everyone does. It's really, really great. It's like 99.7% love rate. Love rate. But anyway, let's see his response to Sarah Eisen's question. Well, why are you guys still printing then? Why don't you give it up? If the economy's doing so well, stop printing. Maybe then we won't have these high inflation expectations. Let's see what his response is.
Once we get out of the pandemic, then I think it'll be time to look at whether monetary policy can change. And as far as Congress goes, I'm growing more skeptical reading the political tea leaves that they're going to be doing anything more either.
Okay, I'm just going to quickly, because we did jump into that there, just to clarify what he just said. This is a big statement here. He's going, hey, look, you know what? Yeah, we're still printing money, and guess what? We're going to keep printing money until the pandemic is over. Remember what he said earlier. It's very important. He's basically saying, we're going to print money until we get to that vaccination level. And we think this vaccination level is going to be harder to get to right here because of S-curve adoption rates for the vaccine. Then he says, about Congress, though, I don't expect them to keep printing money. And this could sort of be an implication. Well, I think it's a clear argument that he's not expecting Congress to send any kind of more stimulus checks or whatever. But it might be a little bit of an argument that maybe the Congress or Congress is even having trouble getting the infrastructure plan done, which could be another way of suggesting that, hey, you know, look, we're still going to be printing. We still have work to do. We're still going to keep holding firm until the pandemic's over. Congress, on the other hand, well, they always have trouble spending money. The fact that they got the spending done they did is great, but we're not going to see any big new stimulus package. Maybe we'll see the infrastructure, but hey, skeptical. We'll see what happens. What he said here. It's a pretty big response on basically the Fed saying, I mean, we're just going to keep printing. Let's keep going.
That's interesting. Finally, just wanted to get your
Sarah nails it.
thoughts on the housing market, which is red hot, and we are seeing now price increases double digits.
Yeah, how price increases Q1 went up like 16% in housing, which was like, which does make me remember to mention that if you want to find deals off market, so you don't have to deal with these crazy sellers that we're in right now, in this market that we're in right now, consider checking out Deal Machine. Go to metkevin.com/deals and just send postcards using Deal Machine in an automated way to the properties that you're most interested in buying. It makes your life so easy. Go to metkevin.com/deals and consider targeting some of your favorite multifamily or fixer-upper deals and making sure you get in front of their face so that when it's time for them to sell, they hit you up first. Hopefully. Check it out by going to metkevin.com/deals. Let's keep listening to his response here on housing.
Bidding wars are back. There's a low supply. Why is the Fed still buying mortgage-backed securities? Do you worry that the Fed is stoking the flames of this hot housing market and hurting affordability?
Such a great question again, and she's reiterating basically a similar question to what she just asked. She goes, why are y'all printing so much money? Then he answered with himself and Congress. Now she's going, well, what about housing? Housing's blowing up, and you guys are basically supporting the housing market too. It's a great part two to her original question.
Yeah, I think it's certainly true that the housing market looks extremely strong. I hope that elicits a supply response. You've certainly got lumber prices being talked about a lot here. So I think that when the time comes, that's something we could look at. But I think it's too early to talk taper here. We're going to let the chair open that discussion when he thinks it's appropriate.
There's the headline. Too early to talk taper. We've heard it from a number of Fed presidents all day long. We thank you for your time, James Bullard, president of the St. Louis Fed.
That was good. I mean, it was very insightful. I think the big bottom lines I took away from this are that the Fed, with two folks today, Mester and Bullard, are thinking, hey, look, inflation, we're going to push for this to be 2.5% for a while. We're going to keep printing for a while. Don't worry about us raising rates or tapering just yet. We got to get that S-curve adoption for vaccines done. And we don't even know what the winter's going to look like. Last time Jerome Powell talked, he mentioned that, look, winter could be bad unless we get that vaccine adoption. So the Fed's holding firm. They're going to keep printing and keep supporting, and they expect that inflation will inflect down sometime between now and next year. But that these inflationary prices will definitely continue throughout the rest of the year. So we'll keep an eye on that. All right, folks, thank you so very much for watching. Go to metkevin.com/deals for Deal Machine. Go to metkevin.com/join for the courses down below. Use that coupon code to the moon, and you get lifetime access to the lectures and the new lectures that I add, which I actually add new lectures, which is really cool because they're like living, breathing courses. Thanks so much, and we'll see you next time.